Former NSA infrastructure analyst Edward Snowden recently took to Twitter and made a revelation about the future of Tesla's stock. He claims the stock price is still too high, which has brought up the question in several investors' minds: is Tesla really overvalued? When a company is overvalued, it indicates a poor forecast for the stock's future. How is Tesla currently handling the macroeconomic upheaval? Will Tesla manage to achieve their future goals? All will be revealed in today's video, so keep watching to find out. Edward Snowden commented on Twitter that the price of Tesla stock is still too high. In response to Elon Musk's tweet in which he asked the public if he should sell any of his shares, he tweeted, "The price of Tesla shares is too high," in reaction to Elon Musk's tweet last year in which the billionaire questioned his followers if he should sell his 10% stake in the company, which was worth $21 billion. At that point, Tesla stock was trading at about $1,200, its all-time high. This struck as particularly odd, seeing as the technology consultant verbatim mirrored the billionaire's post from May 2020, where Musk controversially stated, "Tesla stock is too high in my opinion." The company had just announced a strong quarter a few days prior, which pushed the stock higher. Tesla stock traded at $760.23 just before Musk posted, before falling to a session low of $717.64 and then plummeting even more. So who is Edward Snowden, and why do we care about his stance on Tesla's stock price? Edward Snowden is a former National Security Organization contractor who in 2013 disclosed highly sensitive information from the agency. His disclosures exposed a slew of global monitoring operations undertaken by the US and the UK. Internally, Snowden highlighted the alleged ethical violations of the spying, but no one seemed interested in dealing with the issues revealed. Due to certain reasons, most likely the positive reform that came after his actions, many have valued his opinions on diverse topics. Like several people, he's also stated that Tesla stock is overvalued. A company is considered overvalued when the current price of the company is not justified by its profits perspective, often known as profit estimates or the price-to-earnings ratio. One of the most basic fundamental criteria for determining a stock's value is the price-to-earnings ratio. The higher the value, the lower the price-to-earnings ratio. The price-to-earnings ratio of the S&P 500 is currently around 25, which is far more than its long-term average of 15.9. Tesla's price-to-earnings ratio is currently 193.24. The number is several times higher than the S&P 500 average as a whole. As a result, analysts and other economic experts predict that the price of Tesla stock will eventually fall after the stock struggled to climb back up. This could be devastating news, especially to late investors. After a long state of decline, Tesla stock finally rose back to $920. This is a far cry from its glory days, and many analysts and investors seem to be skeptical if it will ever climb back to those levels. Could the current price of Tesla stock be its peak price? Is a price correction imminent, causing the stock price to go even lower? Snowden doesn't seem to be the only one who believes Tesla's stock price is still too high. Tesla's market capitalization recently topped $1 trillion, but according to New Constructs, an independent investment research firm, the company is nearly $1 trillion overvalued. David Traynor, founder and CEO of New Constructs, predicts the price might drop by 88% to roughly $150 per share. Following an 87% increase in sales to 936,000 automobiles last year, Wall Street experts are raising their predictions for 2022 from approximately 1.3 million to maybe 1.4 million or more cars. Following the announcement of Q4 sales volumes, the stock soared to $1,200 per share, but has since fallen owing to the deteriorating macro environment. Many believe this is due to interest rate hikes by the Federal Reserve occurring as a result of surging inflation, and growth businesses haven't gone unharmed. Bulls have attempted brushing off unflattering comparisons to Peloton and Netflix, two former market darlings down on their luck, as well as concerns over a potential rise in redemptions for Cathie Wood's ARK Innovation ETF, a significant Tesla stakeholder. As a result, investors' immediate focus is building more capacity to support Tesla's still strong growth story. Tesla's forward price-to-earnings ratio is more than 4 times as high as its consumer discretionary sector peers, which are averaging a 31.1 projected earnings multiple. Earnings, however, aren't everything when it comes to valuing a stock. For organizations that are rapidly expanding their bottom lines, the growth rate is also crucial. The price to earnings to growth ratio is a useful tool for incorporating growth rates into the analysis. The price to earnings to growth ratio of the S&P 500 is currently at 1. Tesla's price to earnings to growth ratio is 3.44, roughly 5 times the general market average, which is a significant valuation red flag. The good news is that Tesla has significantly increased its manufacturing capability. Over the next 10 years, Musk has stated that he hopes to produce 20 million electric automobiles. This is more than double the current output of other automotive giants. As a result, it's on a quest to significantly increase its production capacity. Many experts have stated that when Tesla begins producing cars in Germany, it will compete with the electric vehicle market with 3 well-known German brands, Volkswagen Group, BMW, and Daimler AG's Mercedes-Benz division. Seeing as the Berlin Gigafactory is finally a go, this isn't a long way coming. It seems that Tesla might be on track to achieve their goals. In addition, Tesla has been taking action to combat inflation. Elon Musk's social media followers have recently seen him comment on how to deal with inflation, and now the Tesla CEO is demonstrating how his company is dealing with the rising commodity prices. Tesla shares were up 2.9%, as investors seem to take the news of rising Tesla vehicle prices as a positive sign for the company. Musk explained further, saying Tesla and SpaceX are both seeing significant recent inflation pressure in raw materials and logistics. Nickel, which is utilized in electric vehicle batteries, has lately risen in price amongst other materials. To tackle this, Tesla raised pricing on all US vehicle models, as well as some Model 3 and Model Y variants in China. According to the source, Tesla's China website revealed a fresh 5% rise in the starting price for the Model 3 Performance to the equivalent of roughly $57,650. 2 of the company's Model Y SUV options also saw a 5% increase in price. The investor reaction to the price hike appears to be that the company's supply remains tight. The company's products continue to be in high demand, and growing vehicle prices will help it retain its profit margins even as production costs rise. The fate of Tesla's futuristic Cybertruck, which was first announced in November 2019, is another crucial problem the company would need to address. The rumored debut date has been moved back again, this time to the first quarter of next year, although it was originally planned for last year. As a result, Tesla will be a little slower to the market than some of its competitors, who have responded to the occasion. The recent plaudits gained by the Rivian R1T, the launch of the GMC Hummer EV pickup, and this year's projected arrival of the Ford F-150 Lightning could all attract Cybertruck reservation holders, disheartened by the idea of waiting another 12 months for the Tesla. Once the company tackles this, we believe it could be a bullish catalyst. However, experts warn a general market correction might be ahead. Some analysts have expressed concern about the prospect of a market downturn. The intraday swings have been stunning. Jim Paulson of the Leuthold Group, an independent investment research firm, says, "Several significant segments have entered a bear market. Who knows how much longer this roller coaster ride's misery will last or where the stock market will eventually bottom. Because it's been so long since the last drop." Christina Hooper, chief global market strategist at Invesco, a firm with $1.5 trillion in assets under management, believes the chances are increasing. The attempts of the US Federal Reserve to reduce its balance sheet and hike interest rates have only increased the odds. Tesla upping its vehicle prices and its plans to begin deliveries of the Model Y from its Berlin auto production factory by the end of the month will undoubtedly spell good news for the electric vehicle brand. Tesla's main advantage is its demand, as it still outpaces its supply. However, Tesla stock is still stuck in a 4-month consolidation, according to MarketSmith charts, and its relative strength line is trailing. For long-term Tesla investors, the most positive part of the current correction is that it hasn't been as severe as the reduction in top enterprise software companies. Some investors agree with Snowden that Tesla stock is too high, and some experts believe this spells doom. Others believe the company is yet to reach its peak. Is Tesla's stock price too high? Will its overvalued state ultimately lead to the company's downfall? Comment down below.